2025 and 2026 are arguably the best time to buy or invest in the commercial real estate, specifically multifamily, that we'll probably see in the next 10 years. And in today's video, I'm going to be showing you why. And there's four main reasons. From the timing of where we're at in the market cycle itself, there's so many distressed opportunities because of the environment that we're coming out of. Not to mention we have the tailwinds from the Trump administration and all of the political windfalls that happen because of it. And if you want to see the fourth one, make sure you stick around till the end of the video. We're leaving the best for the last. So starting with the very first one, where are we at in the market cycle itself? So it's no secret that interest rates have been at an all-time high over the last 2 years, floating anywhere between 6 and 7%, when just 3 to 4 years ago in 2021 and 2020, you could go out and borrow an interest rate in the 3 to 4% range. So we're coming at an all-time high for values and an all-time low for interest rates. And now where we're at today and why I think it's the best time is because we're at an all-time high for interest rates. And in commercial real estate, the higher the interest rate goes, the lower the value actually goes. So instead of buying at the top of the market with a very low interest rate and paying a large purchase price, if you flip it around and you borrow at a high interest rate, you're actually able to buy these assets for 30 to 40% discounts in comparison to where they were just 2 years ago. So imagine you could go back in time through 2007, 2008. That's when the crash happened, and the best time to buy real estate was 2009, 10, and 11. And anybody who bought then, 10 years later, looked up and made a ton of money and was very happy that they invested then. We're in a very similar environment today. Now, the second reason, and this kind of comes off of number one, which is there is a massive amount of distressed opportunities. Because of how competitive the market was back in 21 and 22, it forced a lot of buyers to finance the properties with short-term loans, and they were hoping to do their business plan and be able to sell it or refi it in a 2 to 3 year period. That would be okay if interest rates haven't gone up as much as they have. And so what it does is it forces the seller to have to sell in an environment where it's not a seller's market. It is a buyer's market every single day of the week today. And not only did they take on a short-term loan that has to be paid this year, so they have to do something, but the type of rate that they borrowed it at, it was not a fixed rate loan. It was a variable or a floating rate loan. So all of the rate hikes that the Fed has done to try to combat the inflationary environment we're in, it's actually hurt the investors and squeezed their cash flow. So imagine you're an investor, you bought a property 3 years ago and your loan matures today and your interest rate doubled in the period of time that you've owned it. That is what is creating so many distressed opportunities. And instead of talking about it, why don't I just show you the last two opportunities that we've personally closed on so you can see exactly what I mean. The last deal that we just bought was called Villas at Stone Ridge. It's in Ocala, Florida. It's a 28-unit townhome property. And the reason that we like the deal is because the seller bought it on both a short-term and a floating rate loan. So when we went under contract, the loan was already in default, meaning the lender was about to foreclose on them, and they basically forced the seller to sell to us, and that means that we get it at a great price. So we ended up buying that property at about a 40% discount in comparison to what we would have paid for it just 2 years ago, and we're able to increase the rents by $300 there. That is a home run deal. And the second deal that we've done is one of our best performing assets that we own today. It's a brand new 102 unit multifamily deal in St. Pete called the Levi. And we were fortunate enough to buy it from the merchant developer who, yes, was in the exact same situation. They started the project 2 years ago on a short-term construction loan, and it was a floating rate loan. And so they were under pressure and forced to sell. And fortunately, we were in the position to acquire both of them. And I can certainly tell you that these are the best performing assets that we own in the entire portfolio. And now moving on to the third reason, the political tailwinds. Whether you hate him, whether you love him, he is the president of the United States. And fortunately for us real estate investor, he and his family created the majority of his wealth through real estate investing. And I can tell you from the last time from him being in office, the regulations and the tax cuts and the bills that he was able to pass dramatically helped real estate investors pay less in taxes and keep more money so that they can buy more buildings. So overall, Trump and the administration being in the office trying to revitalize the United States is actually a great thing for us investors. Now, the biggest thing that he's already done, if you go look through the bill, he's trying to pass the bill that he's already had passed before, which includes 100% bonus depreciation. All this means is whenever you go out and you buy a building, you're able to use more depreciation that lets you pay less in taxes and keep more money. So if you're a real estate investor and you want to make more money or keep more money, then this is a good thing for us by reintroducing 100% bonus depreciation. And the last thing that we'll say about the political tailwinds is the deregulation of Fannie Mae and Freddie Mac. This is a government-sponsored enterprise that is a lender. They go out and they give investors like me the loans to go out and buy properties and make America affordable. That's the purpose of them being in existence. And over the last 10 years, they've gotten very regulated because of the people that have been in the office. And so if you just go to Google and you search all of the firing and all of the things that have been happening there, it actually presents really good opportunities for investors like us, but you have to be looking at it. So from my standpoint, I'm constantly in talks with people that are working there so I can see about new programs that they're announcing to incentivize investment. If you've studied market cycles, even through the late 80s and the S&L crisis and the GFC and even the dot-com bubble, the government has always done something to make the private world a little bit more incentivizing so that people like us could go out and do deals. So make sure that you're paying attention to it, or just simply make sure you're following us here and we'll make sure you know about it. And now moving on to the fourth and the last one, I believe is the biggest reason you should be investing, is because over the last 3 to 4 years, the fundamentals of investing in the multifamily and what makes an investment a great deal have gone out of whack. It does not make sense from a fundamental standpoint. And so all I'm saying is the fourth reason, and the most important one in my eyes, is that the fundamentals of long-term real estate wealth are back into play. And so what do I mean by this? If you're not constantly tracking it, over the last 2 to 3 years, there's been a major supply of apartment buildings being built and delivered and coming online. And so every investor that's looking at it from a macro standpoint was very concerned that we had a record high of all these apartment units coming online, and that could lead to rents going down and people defaulting. And so as those units were completed and they are starting to be leased, one metric that investors like myself look at very closely to understand a supply and demand is how quickly are they being leased up, or the absorption rate. And so if you look at news articles and you pull the information directly from the source, you'll see it is market to market, but overall the consensus is the apartment space is rebounding better than ever, rents are up, renewals are up, and people are paying on time. You had this boom in 21 and 22 that caused a ton of people to start developments that finished in 23 and 24. The world goes crazy, there's a ton of apartments being built, and it's a true testament of the supply and demand of how many renters there are actually coming down to the Southeast, and the stats have been great. So you have all these buildings built, and then it gets full, and then the question mark is what's next? Because how much interest rates have gone up and the cost of materials have gone up, it does not make sense for them to start a project. So a big metric that we track in supply and demand is what's looking at called the multifamily starts, or how many starts to development projects have started, and it is an all-time low. We're coming off a lot of units being built, they're being filled up at all-time record highs, and there's nothing behind it, and there's no additional inventory to be built after 2025 and 2026. And the last thing that solidifies just fundamentals are back is the longer interest rates are staying at 6 to 7%. It is keeping homeowners out of buying homes. So we're seeing abnormally high numbers as far as new renters coming in and the ability to increase the rents, simply because people cannot go out and buy a home. The math to own versus to rent is not in the favor of owning. It clearly is in the favor of renters. And that's why we're seeing such a good rebound in the apartment space. Now, I've been in multifamily now for the last 7 years. I went through the COVID madness and chaos and rent increases, and I've gone through the last 3 years of being a frozen market. And I can certainly tell you that if I had to guess over the next 10 to 20 years, 2025 and 2026 is the best time. If not 2023 and 2024, you've already missed it, is the best time for you to jump in and either buy or invest into multifamily or just general commercial real estate investing. Because of the timing of the market cycle that you're entering, it was too early 2 years ago, and now it's the perfect time today. We have a ton of distressed opportunities because all of the people that jumped into the business 2 to 3 years ago. It presents great opportunities for us today. Plus the Trump administration jumping into office, cutting all of the BS that's happening at the government and incentivizing investment back into the US, I believe we'll be able to ride on the coattails and be able to take advantage of it. And then the last one and the biggest one, which is the fundamentals are back. This is the time to jump in when everybody else is running and the fundamentals are there. We're seeing inclines in the fundamentals. that is the time for you to jump in. So if you guys are interested in jumping in and being involved and looking at deals and trying to take action and meet different people that are actively doing it, I invite you to check out our brand new TDR Pro community. We just launched it for $97 a month. You're literally able to come see our weekly live deal pitches and reviews so you can see exactly what I'm talking about. So if you want to be more involved, see deals, and meet different people that are actively doing it, make sure you click the links in our description, check out the Pro community, and I can't wait to see you on the next call. Now, what I don't want you to do is leave this video and don't do anything. Don't be the person that watches and knows about it, but just doesn't take action. I want you to be the person that said, I remember what it was like going through 2025 and 2026. People told me it was a crazy time to buy, but I did it anyways, and we ended up making a ton of money. That's the person I want you to be, not the person that says in 2035, I wish I could go back 10 years and jump in then. You're probably already saying that about 2009, 10, and 11. So if you guys found any value in today's video, make sure you drop a like, drop a comment of what you want to see on the next video, and most importantly, make sure you hit the subscribe button, and I cannot wait to see you in the next one. Peace.